Welcome to Medicare 360, where we simplify Medicare so you can make confident healthcare decisions for yourself and your family. Today's topic is one of the biggest questions people ask when they're approaching retirement age. I'm turning 65. Do I need to apply for Medicare? And believe it or not, the answer is not always simple. Some people must enroll immediately. Some people should delay parts of Medicare. And others unknowingly make mistakes that could lead to lifelong penalties, coverage gaps, or expensive surprises. Today, we're going to walk through who should apply at 65, who may delay Medicare, employer coverage rules, penalties, spouse situations, HSA issues, Medicare timing traps, and real life scenarios we see every week, every day sometimes. Because turning 65 is not just a birthday anymore, it's a major healthcare decision point. So, why does age 65 matter? Let's discuss the basics. At age 65 is when most Americans become eligible for Medicare. There are several parts of Medicare. Part A, hospital, right? Part B, the doctor and the outpatient coverage portion. Part D, which is the prescription drug coverages. Part C, which is the Medicare Advantage plans. And most people automatically think I turned 65, so I automatically get Medicare. But that's not always true. Who automatically gets Medicare? So generally, people already receiving Social Security or railroad retirement benefits. Not very common, but those that work at the railroad. But I mean, I've only seen it a few times. So they are usually automatically enrolled in Part A and B. So congrats, you do get their Medicare card arrive in the mail within, I would say, about 3 or even 4 months before your birthday or your birthday months, which is awesome because you don't have to worry about it, right? So who must apply manually? People still working and delaying Social Security often must apply themselves, okay? And missing the timing could create problems. So this is where things get nuanced, right? Because should you enroll at 65? So the answer depends largely on employment status, employer size, current coverage, the cost, spouse coverage, and health savings account. And then, yeah, let's touch upon all of these. So let's just go over scenario one. You are retiring at 65. So if you are retiring and losing employer coverage, yes, you should apply for Medicare, and that's typically straightforward. You enroll during your initial enrollment period, which starts 3 months before your birthday, includes your birthday month, and then ends 3 months after your birthday. So that is a 7th month window, right? So just keep in mind though, when you apply 3 months before your birthday, that doesn't mean you already get Medicare. You do still have to wait for your birthday month. And then the 3 months after you turn 65, it would be the month after you apply. Okay. So why timing matters is if you delay incorrectly, coverage gaps may occur. Okay. I mean, that's the worst thing. And then late enrollment penalties do apply, and some penalties last for life, right? And it may not even be that, like maybe it's just pennies, right? But given for your whole lifetime, I mean, who wants to pay a penalty? So, when can you delay Medicare? So now let's discuss this situation where delaying Medicare may make sense. Okay. So we're working after 65. Many people continue working, right? So the key question becomes first, right? How many employees does the employer have? Okay. So the rule is large employer, 20 plus employees, So if the employer has 20 plus employees, you may have credible coverage. Okay. So that means you can delay Part B and then sometimes Part D without penalty. So if you do work with an employer that has less than 20 employees, the small employer rule apply. This is where the major mistakes happen. So if the employer has fewer than 20 employees, Medicare may become primary. Okay? Has to be primary. That means the employer pays secondary. Medicare is expected to pay first. Okay. So if you don't enroll in Medicare, claims may be denied. Okay. So I have seen incidents where someone has a service and then either their work plan or Medicare kind of fight it off on who is to pay. Okay. So please keep that in mind. If it's less than 20 employees, that point, you should just get Medicare and look at your plan options. Okay. So, a real life case study would be a client kept their employer coverage through a small company at 65. So they assumed, I already have insurance, I'm fine. Okay, so let's just say hospitalization occurred and then the claim gets denied because Medicare should have been primary, right? And I want to trust these insurance companies. I'd be like, you are 65. You are in a plan that's not credible coverage, less than 20 employees. We're not going to foot the bill because you should have had Medicare. Okay. So the result could be thousands in this unexpected bill. Okay. So please, please, please keep that in mind. We're here to help you with that. Okay. So part A, right? Should you take it? So part A is usually premium free if you have enough work credits. Most people should take part A, okay, most, but there is an important exception, the HSA contribution. Okay, so that's the health savings account. Okay, just really quick, what is a health savings account if you don't know? If you don't know, you probably don't have it. But it's when you're working and on your paycheck, you're deducting tax deducted, right? No, you're not paying tax. And you're putting money aside for your health care in the future. Okay. So that money builds and grows. And when you're able to take that out or want to get reimbursement, it is tax free as well. Okay. So that's the health savings account. So enrolling in any part of Medicare stops HSA eligibility. And so this catches many higher income workers off guard. So not that you would be penalized, but it's just a big, big, big hassle to talk to your tax person, revise your taxes. From what my clients tell me, it's very hard to do. So just do not apply for any parts of Medicare Part A if you are contributing to a health savings account. So another caveat on this is that an important detail is that Part A could retroactively start up to 6 months back. So what does that mean? Meaning the HSA over contributions may happen accidentally. So this is a huge plan issue. Okay, so this means is let's just say you were retiring June 1st. Okay, you've been contributing to your health savings account. Let's just say you're 70. Okay, like for 5 years or whatever, right? But you know, when you turn 70 June 1st, you want to stop working, retire, right? So technically, you should stop your HSA contributions on June 1st because Medicare retrobacks your Part A hospital 6 months before your Part B. Yes, confusing, but just keep that in mind. Okay, so the teaching line on this is that Medicare and HSAs do not mix. Okay, so this is very common When one spouse turns 65, the other is younger. So, question becomes, does spouse lose coverage? Should both stay on an employer plan? Does younger spouse need ACA coverage? So, yeah, those are the factors that we definitely deep dive and do some comparisons for you, which would be better if you get on Medicare. That would leave your spouse without any insurance. And where do they get their insurance if you leave that group plan? Okay, so let's just go over a scenario. The husband turns 65, the wife is 61. Husband moves to Medicare. Wife stays on employer plan, Cobra or Covered California. So this requires a lot of coordination, right? Because first, let's just say the employer plan is the husband's, right? Will the spouse be able to keep the employer plan? More than likely not, but that's an HR question you could ask your company. Cobra, Cobra is very, very expensive sometimes, maybe half the time, right? And sometimes they don't even send you your Cobra information on how much premiums are till months later. So it's you're kind of like left in the dark. Yeah, some of these things for healthcare is just leaving you in the dark. I think this should be changed. Okay. So then the wife could go on Covered California and or like a an ACA exchange, Affordable Care Act plan if it's outside of California. Okay, so that's requires coordination, and we definitely could help you with that. We're pretty good at that. Okay, so important point is Medicare decisions affect the entire household, not just the person turning 65. Okay, I mean, plus if you have kids, like minor children or even children up to 25, 26, that comes to play as well. Okay, so let's talk about penalties people don't understand. Part B penalty, if you delay Part B without credible employer coverage, penalty is 10% for every 12 months delayed, and this penalty usually lasts for life. Okay. Part D penalty, drug coverage penalties also apply if you go too long without credible prescription coverage. Even healthy people can face penalties later. Okay, so let's just recap that. Okay, if you are not under a credible coverage plan and you do not get on Medicare, you'll get penalized 10% for every year 12 months late. And what is a 10%? It's whatever the premiums are for that year, right? Per that month. And so it could add up. Okay, and it's lifelong. Okay. So Part D penalty, drug coverage penalties also apply if you go too long without prescription drug coverage. Okay. So let's just say you do not take any prescription drugs. So you do not want to get a drug plan. And so maybe 5, 10 years later, you get a heart attack or stroke and you need better medication. You need some medication. So let's just say those 10 years you didn't have a plan. So 10 years, okay, so that's 12 times 10 is 120. So 120%, you'd be penalized, right? But we do help you with those calculations to see if it's worth it, if your drugs are in the hundred, like in the thousands, right? So please make sure you do have a drug plan. So, another big understanding is people think I'm healthy, so I don't need Medicare yet. But Medicare timing rules are not based on health, they're based on eligibility and coverage structure. So, what people should do before age 65, here's what I could recommend before turning 65. Okay. So, step one, review employer size. I mean, You probably know if your company is a large company, right? But there's some borderlines between maybe that 18 to 22 people. Okay. Step two, verify credible coverage. Just make sure your drug coverage is credible. You can talk to HR about that. I mean, if it's a large company, they pretty much should know. It's not hard. Okay, step three, understand cost. So this is a thing, right? Let's just say you are on a group plan. It is credible coverage, but you just know the plans they have just you don't like them, or they keep going up in price, or the coverage keeps changing every year, right? So this is when we're comparing your premiums, your deductibles, the networks, your prescription drugs, the max out of pockets, your co-pays, your co-insurance, you have any upcoming surgeries. We take all that account, like the doctors, the specialists, the dentists, we take all that accounts, just really do a comparison. Is your plan as good as Medicare? Most plans that are 20 plus employees, they say should be good, right? Equivalent or better than what Medicare has to offer. Okay, so keep that in mind, but we do review that for you. So step four is review your health savings account contributions. Avoid these tax issues, right? So I know sometimes you are not going to know when you want to retire, or just maybe it's a forced layoff or an unexpected layoff or something like that, right? But if you do know, like I am retiring at age 67 on my birthday and I'm contributing to health savings account, let me stop the health savings contribution 6 months before, right? Put it on your calendar. That's the best. And 70, like, yeah, I would just stop at 6 months before you're 70, 69 and a half, right? So definitely plan early. Do not wait until the last minute, right? Of course, there's just some people that are late birds. And if you are, not to worry too. We are here for you and help you get this done. Okay. So it is good to plan early though. Okay. Just a couple notes on how to apply. So if you're applying for part A and B, online is the easiest avenue. Okay. That's the easiest avenue. You do have to create a user ID and password with login.gov or id.me if you don't have one already. Okay. And then you do need your driver's license and then like a cell phone that takes camera pictures, like selfie, for facial recognition. Let's just say years ago, the system sucked so bad that we would have to take a picture of the client 5 times, even go to the post office. But now the facial recognition thing is easier. Okay. Okay. So that's part A and B. Can make a phone appointment or in a social security appointment, but really it's easy, the easiest to do it online. Okay. You want to apply for part A, same thing, apply online. Okay. And then I guess another thing that I wanted to mention is that let's just say you know you're not going to want to get Medicare. Like, do you have to apply for Part A? I strongly encourage it if you're not contributing to a health savings account, because this way, when you are ready to get Part B, Social Security has already verified who you are, has went through the proper procedures on vetting who you are, right? So when you get Part B, it's 2 forms. One called the CMS 40B, where HR, your manager, signs off on it that you've had Medicare, not Medicare, sorry, that you've had credible coverage, so you're not penalized, okay? And then the other form, sorry, that's the CMS 40B is what you sign off on, when you want Medicare to start. The other form is called L564 is where the employer signs off on it. Okay. So that's that. Another thing to note, if you were not born in the United States, sometimes Social Security does require you to provide a birth certificate. That's the most common one I see. So they do want you to provide an original copy. So if they do, unfortunately, you mail that in, but they will mail it back. Okay, so don't worry. Never had a case that Social Security lost it, but that's how they want it. If it's in a different language, get it translated. Okay, and then sometimes there's just lately there's a few issues I've had where like you don't qualify, and it's like really what? If you do get those letters, please call in to them to see why, because it might be just a error. So keep that in mind. Okay. So, we covered how to apply. We definitely help you with that. If you're local to us in Southern California, we could come to our office. We have one in Anaheim and Seal Beach, and just get it done because we do this every day. So for us, it takes me 10 to 15 minutes. For you, it could take you 30 minutes or an hour, right? So we do help you with that. So if you do remember one thing from today's show, let it be this. Turning 65 does not automatically mean everyone should enroll in the same way, right? Your neighbors, your friends, your family members, your parents, your closest confidants, like everyone's situation is different. So that's why we're here to be your trusted experts to make sure that you get everything completed in a timely manner. The only thing we can't control is Social Security sometimes. They are not allowing us to make three-way calls anymore with clients. So we unfortunately just have to refer you to call them. I don't like that. Sometimes they just take a long time processing if they have a lot on their plate that month. So we do help follow up and, ease your concerns on that. Okay. So what should your decision depend on? Okay. Your work status, the employer size, your spouse coverage, dependent coverage, your financial goals, just the timing of everything. Okay. The right decision could definitely help you save money, right? Because nowadays with inflation, everything is just costing so much. I remember when bread was $1. Now it's what, $6, $8. Things like that, right? Um, Penalties. We do not want anyone to be penalized if they don't have to, especially if you have access to an agent broker like me that could help you guide you through this process. Stress, when it's down to the last wire, we funnel through that, we zigzag, we help you through, right? But better start earlier, 3 months before your birthday month, to just get things done. Okay. And then coverage problems later, depending on the plan you want. There's some underwriting things on that. In Southern California, I know a lot of clients, like, they watch YouTube and things like that. And, some YouTubers are just like, no, you have to get this plan. It's the best plan. But let me tell you, in Southern California, we are a different beast. We're just very different with our coverages amongst the other states, right? And the nice thing is we actually have great coverages, so the plan options are a little bit more abundant for us. Okay. So at Medicare 360, our mission is to educate. Okay. My timer, my alarm. Okay. So here at Medicare 360 radio show, our mission is education first, helping people understand how Medicare works in real life. Thank you for joining me today. I'm Jennifer Alfonso Lee, your host, and this is Medicare 360, where clarity always comes before coverage. Have a wonderful day.